Welcome to Aviation Intelligence Weekly with Sarah and Mike, your guide to the aviation industry. Welcome to Aviation Intelligence Weekly. I'm Sarah.
And I'm Mike. This week we're covering the period from January 25th through February 1st, 2026, and what a volatile week it was for aviation stocks.
Absolutely, Mike. We saw some dramatic swings across the sector. Southwest Airlines was our standout performer with a massive 13.49% gain, while on the flip side, Frontier Airlines took a serious hit, dropping over 10%. Before we dive into the specifics, what's your overall read on the market this week?
You know, Sarah, what strikes me is the bifurcated nature of the market right now. We're seeing clear winners and losers, not just a broad sector move. Alaska Airlines managed to stay essentially flat at $50.83, up just 0.40%, which in this environment almost feels like a win. But then you have these major carriers like United and American taking significant hits.
Right. United closed at $102.32, down 4.31%, and American really got hammered, dropping 8.40% to $13.30. That's a pretty stark contrast to Southwest performance. What do you think is driving this divergence?
I think we're seeing investors really scrutinize business models and operational efficiency right now. Southwest has always been the darling of operational simplicity, and when markets get nervous, investors tend to flee to what they perceive as safer bets within the sector. The fact that Southwest jumped over 13% suggests there might have been some specific catalyst or just relief from previous overselling.
Speaking of Southwest, let's dig into that 13.49% surge. They closed at $47.52, and there was an 8K filing on January 28th. Mike, Southwest doesn't typically see this kind of single-week volatility. What's your take on what might be driving this?
That's exactly right, Sarah. Southwest is usually the steady Eddie of the airline sector. For them to pop over 13% in a single week is really unusual. The 8K filing is definitely worth noting because those current reports typically contain material information that investors need to know immediately. Without seeing the specific content, it could be anything from operational updates to strategic announcements or financial revisions.
The timing is interesting too, because this comes at a time when other major carriers are struggling. American Airlines, for instance, not only dropped 8.40%, but also had their own 8K filing on January 27th. Are we looking at company-specific stories here rather than broader sector trends?
I think you're onto something there. The fact that we have multiple carriers filing 8Ks in the same week, but seeing completely different stock performance, suggests these are indeed company-specific developments rather than sector-wide trends. American's decline to $13.30 is particularly concerning because that's putting them in penny stock territory relative to historical norms for major carriers.
And it's not just American. JetBlue also took a significant hit, down 7.59% to $4.87, and they also filed an 8K on January 27th. Mike, when you see multiple airlines filing current reports and experiencing negative stock performance simultaneously, what does that typically signal to you?
Well, it could indicate we're in an earnings season or a period where airlines are providing operational updates. January is typically when airlines start giving guidance for the year ahead or reporting preliminary fourth quarter results. The clustering of these 8K filings around January 27th and 28th suggests there might have been some coordinated disclosure requirements or perhaps industry-wide developments that required immediate reporting.
That's a good point about the timing. Delta also filed an 8K on January 27th and saw their stock decline 2.70% to $65.89. But their decline was much more modest compared to American or JetBlue. What do you make of that difference?
Delta has historically been viewed as one of the higher quality operators in the space. So even in a down cycle, they tend to outperform on a relative basis. A 2.70% decline isn't great, but when you compare it to American's 8.40% drop or JetBlue's 7.59% fall, It shows that investor confidence in Delta's management and operational capabilities remains relatively strong.
Let's shift to some of the other movers. Frontier Airlines was our biggest loser, down 10.77% to $4.64. This is particularly notable because ultra-low-cost carriers like Frontier have been under pressure for a while now. What's your analysis of what's happening in that segment?
Frontier's drop to $4.64 is really concerning, Sarah. When you're talking about an airline stock trading under $5, that raises serious questions about the viability of the business model, at least in the current environment. The ultra-low-cost carrier model has been under tremendous pressure, and we've seen this across multiple players in that space. Frontier's 10.77% decline suggests investors are increasingly skeptical about their ability to compete effectively.
And it's interesting because, on the other end of the spectrum, some of the smaller carriers actually performed well. Sun Country Airlines was up 1.10% to $17.54, and Allegiant Air gained 0.91% to close at $88.63. Are we seeing a flight to quality even within the smaller carrier space?
Absolutely. Allegiant at $88.63 and Sun Country at $17.54 represent very different business models compared to Frontier. Allegiant has their vacation package model with higher margins, and Sun Country has been executing well on their hybrid approach. These aren't pure ultra-low-cost carriers in the traditional sense, so they're not facing the same margin pressures that Frontier is dealing with.
Now let's talk about Boeing, which had a rough week, down 7.07% to $233.72. They also had significant activity with two SEC filings, including a 10-K annual report filed on January 30th. Mike, Boeing's performance obviously affects the entire aviation ecosystem. What's your read on their latest developments?
Boeing's decline to $233.72 is significant, especially given the 10-K filing, which is their comprehensive annual report. The timing suggests this might be related to their full year 2025 results and outlook for 2026. We also saw some news about Boeing's services division posting a small profit while their commercial airplanes division, the BCA, is apparently still losing money. That's a concerning dynamic because the commercial aircraft business should be their core profit driver.
Right, and there was also news about the SPIA union at Boeing Wichita approving a new contract with 85.8% voting yes. On the surface, that seems like positive news for labor relations, but the stock still declined. How do you interpret that?
Well, while resolving labor issues is generally positive, investors are probably more focused on the fundamental business performance. If the BCA division is still losing money, that's a much bigger concern than labor contract approvals. The fact that Boeing's services division is carrying the profitability load suggests they're still struggling with the core aircraft manufacturing business, which is troubling given the current demand environment.
Speaking of broader industry issues, there was news about RTX's 2025 earnings, with their commercial aerospace division leading growth as Pratt advances their GTF recovery. Mike, how does supplier performance like this typically affect airline stocks?
RTX's commercial aerospace performance is actually quite important for the airlines, Sarah. Their Pratt & Whitney engines, particularly the GTF or geared turbofan engines, have had well-documented issues that have caused operational disruptions for airlines using those engines. If Pratt is making progress on the GTF recovery, that's potentially very positive for airlines like JetBlue and Frontier that rely heavily on those engines.
That's interesting context, especially given JetBlue's poor performance this week. You'd think positive news on the engine front would help them, but they were still down 7.59%. Does that suggest their issues go beyond just engine reliability?
Exactly. If GTF recovery news isn't enough to lift JetBlue, it indicates their challenges are more fundamental. At $4.87, JetBlue is trading at levels that suggest serious concerns about their business model and competitive position. The engine issues have been a headwind, but clearly, investors are worried about broader strategic and financial challenges.
Let's talk about AerCap, the aircraft leasing company, which declined 0.92% to $143.66. They had 3 news articles this week, which is unusual. What role do lessors like AerCap play in the current market dynamics?
AerCap is fascinating because they're essentially a bellwether for the entire commercial aviation ecosystem. As one of the largest aircraft lessors, their performance and outlook gives us insights into airline credit quality, aircraft demand, and residual values. The fact that they only declined 0.92%, while airlines were seeing much larger swings, suggests the leasing market might be more stable than the airline operating environment.
That's a good point. It almost suggests that the fundamental demand for air travel and aircraft might be solid, but it's the individual airline execution and business models that are under pressure. Mike, when you look at all this data together, what's the overarching narrative you're seeing?
I think we're in a period of significant differentiation, Sarah. The days of rising tide lifting all boats in the airline sector seem to be over. Investors are really drilling down into individual company fundamentals, operational efficiency, and strategic positioning. Southwest's 13.49% jump, alongside Frontier's 10.77% decline, perfectly illustrates this bifurcation.
There was also some concerning news about the NTSB determining the probable cause of a mid-air crash in the DC area. While we don't have the specific details, how do these types of safety incidents typically affect the broader aviation market?
Safety incidents always create a cloud of uncertainty over the sector, even when they're not directly related to aircraft manufacturing defects or systemic issues. Investors tend to get nervous about potential regulatory responses, increased oversight costs, and public perception impacts. The fact that this involves NTSB probable cause determination means we're likely to get detailed findings that could have broader implications.
Looking at the SEC filing activity, we had 6 total filings across 5 companies this week. That's actually quite a bit of regulatory activity. Beyond the specific 8Ks and Boeing's 10K, what does this level of filing activity tell you about where we are in the reporting cycle?
This clustering of filings definitely suggests we're in a period where companies are making material disclosures, likely related to fourth quarter and full year 2025 results. The fact that we're seeing mostly 8K current reports rather than routine quarterly filings indicates these are probably significant developments that require immediate disclosure rather than waiting for regular quarterly reports.
As we look ahead to next week, what should our listeners be watching for? Are there any key indicators or potential catalysts that could drive further market movement?
I'd be watching for follow-up information on those 8K filings, particularly from Southwest, American, JetBlue, and Delta. If Southwest's surge was driven by a specific announcement, we should see more details emerge. On the negative side, I'd be monitoring whether American and JetBlue can stabilize, or if we see continued pressure on their stock prices.
And presumably, we'll get more clarity on Boeing's full-year results and outlook, given that 10K filing. Mike, any final thoughts on the week's developments?
I think this week really reinforced that we're in a stock picker's market in aviation. The 26 percentage point spread between Southwest's gain and Frontier's loss shows that individual company fundamentals matter more than ever. Investors need to be very selective about which aviation stocks they own because clearly not all airlines are being treated equally by the market.
Excellent analysis, Mike. That wraps up our coverage of the January 25th through February 1st period. As always, this analysis is for informational purposes only and should not be considered investment advice. Please consult with qualified financial professionals before making investment decisions.
Thanks for listening to Aviation Intelligence Weekly. We'll be back next week with more analysis of the aviation markets. Until then, keep watching the skies and the stock tickers.
See you next week, everyone.